I guess that old saying, more money, more problems, is exactly right. So when you file a tax return, it goes through the IRS processing computer. And then your return is scored, right? The computer gives your return a score. And the higher the number on that score, the more likely it is that you're going to get selected for audit. So what are some of those things that make it have a higher score? Well, the first one would be rounded numbers. So if you, well, let's just say for instance that you're reporting that you paid exactly $10,000 in mortgage interest, you know, that's kind of suspicious, isn't it, right? So that raises your score. Second off, unreported income. Let's just say that, you know, your employer reports that you made $100,000, but you report that you only made $50,000. Isn't that a red flag? Yeah, it for sure is. Third is math errors. That's pretty simple, right? So use the software and don't make math errors. Fourth off has to do with charitable deductions. So the IRS knows that you can only contribute so much to charitable deductions based on how much you're making. So if you're inflating those numbers, it's definitely going to draw a red flag. And then the last one, and certainly this list isn't exhaustive, there's certainly other things out there, but the last one has to do with you making over $100,000. If you're making more than $100,000 a year, believe it or not, you are 500% more likely to get audited than somebody that's making under that. So I guess that old saying, more money, more problems, is exactly right.